Hello and welcome. You're tuned into Mid Cap Masala right here on ET Now. I'm Shrishti Sharma, and viewers, this is a show where we tell you all that is happening within the broader end of the market and also get you the management voices. And today we're going to be focusing on Coromandel International, and we have the management as well to talk more on the growth outlook going ahead. And with this, let me welcome Mr. S. Shankar Subramaniam, who is the MD and CEO of Coromandel International, joining us on the show. Hi, a very good morning, and thank you so much for your time. And firstly, when we look at your numbers, there is an profit before tax, before the exceptional item, if we consider, that has actually fell 22% in Q4 despite a 19% revenue growth. So why don't you help us understand what drove the margin compression in this particular quarter and what were the factors behind it?
Good morning, Akshay. Thanks for talking to us. And Coromandel reported a very strong performance in Q4. Revenue is put up to 6,000 crores, registering growth of 20%. And also EBITDA, which is an operational performance, has grown by 16% to 492 crores. So there's a healthy growth in operational performance. As you rightly mentioned, there has been an exceptional item in the previous year. The sale of property has registered an income of 300 crores plus last year. Against this, in the current year, we have got a provision of rupees 71 crores towards impairment of certain investments. So there is a variation of 400 crores that has resulted in modest net profit, what you have seen, 115 crores. But operationally, this year, all businesses have done well. Of course, the sudden spurt in raw material prices and fertilizers not adequately compensated by the subsidy rates had led to some contraction in margin for fertilizers. But other segments, crop protection, specialties, retail, we have done well. Overall, if you look at Coromandel's performance, we registered a record turnover of 32,000 crores for the year, with EBITDA of 3,232 crores, really good performance in the history of Coromandel. And also in terms of our investments over the last 2 years, what we have made, more than 3,000 crores, started paying dividend. And if you can see the Nagarjuna, which we have acquired in the Nagarjuna Agricom, we acquired in first quarter of this year, has turned out very well and generated operational profit of 103 crores against the loss they made last year. So operationally, fourth quarter has been good. Overall, has been a good year. Of course, the challenges on raw material prices and exchange currency depreciation do have an impact on the fertilizer margins at this point of time.
All right. Thank you so much for that lowdown. But also help us understand that how severe has the impact been because of the West Asia crisis, and especially what's been happening on the raw material pricing front, and how are you managing that?
Overall, there has been a spurt in raw material prices. As you know, ammonia has gone up almost double, sulfur prices have gone up, urea prices have gone up, all key raw material prices have gone up. Coromandel has been always diversifying its sourcing beyond Middle East. We have got sources from Southeast Asian countries. We have been procuring from Canada, Russia, as well as China in some cases. So overall, we have a diversified portfolio. You can see last year we could operate the plants at 100% capacity, and we never had any production outages. And even for the ensuing Kharif season, we are reasonably covered for the first quarter. This is due to the diversified portfolio and alternate sources what we have. Of course, the West Asian crisis has really impacted because India imports more than 80% of the ammonia need, as well as 70 to 80% of the sulfur needs from Saudi and Qatar, and this has really impacted the availability. But the industry has been working closely with the government to ensure availability, and we have been going around alternate sources to secure. And at this point of time, we are reasonably covered for the first quarter. We need to wait and see how it's going to play out, and things normalizes. Hopefully, we should be able to secure adequate material for the Kharif season as well.
Right, so that's as far as raw material pricing is concerned. Morning, Ashesha, this side. Since you're talking about the spike in raw material prices, also wanted your thoughts on whether you're passing on the impact of spike in raw material prices, or is that likely to have an impact on your margins?
In fact, if you understand the fertilizers, government support has been quite very responsive. And in fact, last year, government has supported DAP by compensating the entire price increase, which they hope to do this year as well. And to that extent, the pricing for the farmer is taken care of on a main product like DAP. And urea, anyhow, it is a pass-through mechanism. In terms of NPK fertilizers, while we have a freedom to pass on the price increase, but as a responsible industry players, we have been engaging with the government to look for compensating for the additional cost of ammonia and sulfur, especially. And we have been receiving favorable responses and hope we should be able to continue the protection. Here, one is the price, another one is the availability. We are first concerned about availability. Once we secure materials, we'll ensure that fertilizer is made available. And we should be able to factor the potential subsidy increase, and then if anything is required, still we may have to pass it on. But overall, we will keep the farmers' interest in mind and agriculture in our overall interest of the economy.
Absolutely, point noted, but just wanted to have some numbers, and especially when it comes to your EBITDA per ton. If you can give us some understanding, where was the EBITDA per ton at Q4? Because I believe that at the end of Q3, you had told us that post backward integration, EBITDA is expected to improve to 6,500 rupees per ton. So what's the status right now, and what could be the outlook for FY27?
You're absolutely right. And as rightly pointed out, our new project has got commissioned on time, and the trial production is going on. And definitely this captures the value addition on one of the key raw materials, phosphoric acid, which we consume for NPK manufacturing. That should kick in from the current year onwards. Last year, overall, our average EBITDA is around 5,000 to 5,500. Of course, on the fourth quarter, we had a compression in the margins on fertilizers, mainly due to sudden spurt in raw material prices, not adequately compensated by subsidy. As you know, subsidy is getting announced once in 6 months. So we had a soft EBITDA margin in the fourth quarter, but overall, still on an annualized basis, we have managed 5,000 rupees per ton on an overall basis. But going into next year, these current challenges are temporary, I presume, and supply side, once it improves, prices gets normalized, and we should be able to get back on track and structurally be in the same direction. And once the situation improves and prices normalizes, we should be able to still keep track on the EBITDA margin, what we have been discussing in the past.
So we got your thoughts on EBITDA margins, but also wanted your thoughts on demand, because this time around monsoon is expected to be below normal. We're expecting rainfall anywhere between 92 to 94% of long period average. Will that weigh heavy on your demand this season?
No, we have seen in the past as well. You're right that there can be a potential reduction in the monsoon situation, especially in August and September. They are talking about 90 to 95% of the long period average. But in the past, when you look at this sort of variation of 5 to 10% on monsoon, farmers are able to observe this sort of a variation. It's more of a spatial distribution which matters rather than the quantum of rainfall. Just to recollect, last year we had a good monsoon, but the late withdrawal has impacted the crop and in fact impacted the fertilizer and agrochemicals application. Rather this year, the spatial distribution is good. I don't see a challenge, and 10% of monsoon doesn't impact the agri inputs big time. The farmers switch crops and farmers go for alternate cereals to manage this. And I don't think there will be any demand impact on fertilizers or agrochemicals. Rather, I expect with a sort of a in-between stoppage on monsoon and rainfall can augur well for the agrochemical business. So I think the El Nino impact, while we have to wait for the IMD forecast, which generally comes region-wise by May end, we are not unduly worried about this, because we are yet to see how the Indian dipole, which can neutralize the El Nino impact, is going to play out. If that happens, then India can have a reasonable Kharif monsoon with good acreages as well.
All right, and we look forward to that. But with this, we let you go. So good having you on the channel today. Thank you so much for your time, and all the very best for the upcoming earnings.
Thank you very much.